Hello and welcome. You're watching Market Fatafat on ET Now. I am Snehi Shah. Let's take stock of what the markets are doing right now before we head on and talk about all the big buzzers in today's trade. Well, Nifty is trading with cuts of now almost 2% in today's intraday session. We're finding it tough to hold on above the 22,100 mark right now. The gash has intensified. The sell-off has intensified in today's trading session. Sensex also lower by almost 2%. That's a 1,500 point almost cut coming in on the Sensex as well. India VIX, not surprised, has spiked up 5.6% right now as we speak. Things were looking good till midday and then we have taken a bigger cut after that. Nifty Bank, who's trading with cuts of just 0.6%, is now declining almost 1.3%. So not looking good. If you take a look at anywhere in the market, nothing is looking good right now. The broader markets are taking it more on the chin. The mid-cap index is down about 3%. Small cap is leading the losses of 3.3% intraday cut coming in across the small cap space. Nifty IT is lower by 4%. Nifty Auto and Media also following suit at 3.5% cuts. PSU Bank down 3.2%. FMCG, Metal, Realty, Pharma, Bank. All of these indices are down and out in today's trading session. There's absolutely no scope of recovery looking like today because we only have about 2 hours of trading session left and it's difficult to say if these losses could be recouped today. Seems unlikely. But let's move on and talk about all the stocks that are buzzing in today's trading session. And to do that, I'm being joined by the guests on the show today. Dhvani Patel, founder at Finversify, joins us on the technicals, and from our in-house research team, Jina is joining us. Good afternoon to both of you. Dhvani, coming to you first for a technical check on ICICI Bank. Last 1 month, 3 months, 6 months, shade of red coming in on the charts. Last 1 year, however, the stock has also not done that badly, but not done anything great at all as well. A modest 10 to 15% return is what the stock has given. What's the outlook on the charts going ahead?
Good afternoon. I'm talking about ICICI Bank first. The reason why it's on the technical radar today is that the counter has given a cut over here of about 1.5%. With this cut, the counter has also crossed its 200 DMA on the lower side, and we are trading on the low point of the day. Given 1200 is taken out over here on the daily basis, we'll be seeing further cuts coming in this counter. The next support level for this counter comes up at 1160 levels. So we'll see a further fall coming in this particular counter from the current level, and in fact on the momentum side as well, we are seeing that the directional move index is giving a crossover on the negative side over here. So further cuts can be expected on ICICI Bank, and the stop loss that one needs to now maintain on the higher side to regain any bullish side of trades over here is going to be of 1225. So ICICI Bank is a sell coming in from this level.
That's the technical outlook on ICICI Bank. Let's move on through the spotlight on Jubilant Food, a stock that's tanking away in today's trading session post the analyst meet that was held yesterday. Now, aside from what the highlights were of the analyst meet, if you simply just take a look at what brokerages are making of this, it's a negative view coming in largely across brokerages. We have some that are upbeat as well, but let's talk about the ones that are negative on the stock because that stock is trading with cuts of around 7% in today's trade. Let's start by talking about Jeffries. They've maintained a buy rating with a target price of 1,000 rupees, but they also think that margin guidance may disappoint a section of investors, though the margin of 14.6% that the company had in Q3 is the best across its industry. Macquarie then, they've maintained an underperform rating, target price cut of 575 from 640. They're disappointed by the delayed margin recovery and suggested by the 200 bips plus a 3-year consolidated PAT margin expansion guidance that they have. That's weaker than expectations as well. They've also toned down margin recovery expansion expectations, also further driving a 4% cut on their FY 26-27 EPS. Talking about JP Morgan, they're neutral, but they've cut the target to 671 from 700 earlier. They like initiatives to strengthen competitive moats, but the valuation gap seems absolutely at its upside. They don't see any valuation comfort on the upside here. So that's the take on brokerages on Jubilant Foods. But we also spoke to the management in our See You at Work segment, and in this edition, we take the conversation forward with India's largest QSR player, Jubilant Foodworks. Samir Khetarpal details the secret sauce to successfully delivering your pizza in under 30 minutes, and here's a little bit of a snippet of that chat.
I think one of the reasons why Jubilant Foodworks, or I would say Domino's in India, is not just a #1 pizza company in India, but the #1 QSR, is because we've always made bold investments. And bold investments in technology. So we have our own app. Majority of orders and new customers come from our own app. When I came in, I invested the entire technology team into Domino's app. I shut down all programs, but to focus on Domino's. It's paying off now.
Okay, well, on that note, let's move away from that and talk about Havells. Dhwani, give us a sense of what Havells is doing. Of course, that stock has been in focus on the back of that ultra-tech foray into the wires and cables segment. So tell us what Havells is looking like on the charts to you. Because when I pull up the charts, last 1 month it's been a 10% cut. Last 6 months it's lower by 25%. Last 1 year also it's given a negative return. Do things look better now, especially after the steep correction that we saw coming in the stock yesterday?
Interestingly, in fact, if you even see Havells from the all-time highs, we are almost 34 to 35% down in this particular counter. The stock on the weeklies gets interesting over here because the counter is going to test its 200 weekly average over here, which is at 1375 level. So that is one level which it has not broken since the run-up we have seen into this counters after the COVID fall that we had seen. So from that 2020, we have seen a good run-up coming in over here. From the all-time highs, we are almost 35% down on this counter. Having the stock holds out over here at 1375, which is on the short-term basis over here, a downside target. If we hold on to this particular level, we'll see a certain bounce coming in. But given this level breaks on the lower side, we'll be seeing further cuts coming in on Havells. Given the news flow as well, I do see bearish setup being activated over here on the lower side. 1230 is the next level that one should eye for, having a fall below 1375 levels. So Havells is a cautious approach coming in at this level. From the long-term perspective, if anyone's holding into the portfolio, 1375 is the stop loss that one has to maintain over here. Having gone below the same, we'll be seeing further cuts coming in over here.
Okay, so that's the outlook coming in on Havells India. Let's move away from that. Jinai, coming to you for Godrej Properties. They had their meeting yesterday as well. Tell us about everything that's happened and what brokerages are making of it.
Well, as Godrej Properties in focus on the back of management meet with IIFL Capital. They've maintained ad rating with a target price of 2,690. What they say is that they are positive on the Viclory land bank monetization. Also, the management, they remain positive on the monetization of the same land bank. FY25 pre-sales that are likely to be met is what IIFL Capital is expecting. Also, the collections in Q4 are expected to be stronger when compared to last quarters. And also the key which will be further going up will be the scaling up for the market demand and not the execution, is what IIFL Capital believes, and that is why Godrej Properties is in focus, currently trading up, currently actually trading flat.
Okay, trading flat, but well, we'll take any shade of green we can see on the screen right now, given the way the market setup is looking like. On that note, we'll slip into a very short break and keep it going with all the big buzzers in today's trade. Just on the other side, we'll be right back. You stay tuned. Hi there, welcome back to Market Fatafat. Before we keep it going with all the big buzzers in today's trade, let's talk about BigBasket because they're doubling down on their quick commerce strategy. This is the word coming in from the co-founder Hari Menon in an exclusive chat with ET Now. He also added that they have the best average order value in the industry and that they're just a few months away from profitability. Listen in to a snippet of this conversation he had with my colleague Anjali.
So by August, September, right, we would have 700 such large dark stores. And these dark stores are very profitable for us because we carry a larger assortment and we're able to get more business and more orders from customers because of that, right? So that's one. Second is, as you know, we have become default quick commerce now. Earlier we had two actually offerings, and so customer had to choose whether they wanted it in 10 minutes or they wanted the same day through two doors that you could enter. We've just merged the two. And we have only one door now, or no door. So you click on BB, it opens. Default option is quick commerce. Right. And when you check out, you also have an option for slots, for scheduled slots. So that is the other thing that we've done. So essentially become quick commerce, essentially doing larger dark stores and expanding assortment.
So when you do larger stores and have a larger assortment, that also translates into larger AOVs. So in terms of where the quick commerce market is right now, where do you see your where are your AOVs currently, and what's your plan? How much do you think you can scale your AOVs with the larger dark stores?
Yeah, so we are doing exceedingly well on AOV, and this is what we've done well all our through our journey of last 14-15 years. So now we have a blend of the AOVs from our scheduled business and from the quick commerce business. Our current AOV is by far the industry best, which runs at about 850 rupees. I think it will remain there. I don't think there's scope right now to grow that too much. Our objective is to make sure we hold it, because what's happening because of quick commerce is that frequency of buying increases And when frequency of buying increases, your average order value tends to come down. But we've been successfully holding on to this average order value for the last 5-6 months. And I think this will sustain. If this order value sustains, I think it will become profitable much faster than probably others.
So what's the timeline that you are seeing in terms of profitability for the
I
company?
think in the next 4 or 5 months, a lot of these large format stores will turn profitable. That we are clear. It's already trending towards it. Almost 100 plus stores are already profitable. We'll get another 110, I think, if I remember the number right, we'll get in the next month or two. So the large format stores are becoming profitable faster. Single biggest reason is that it drives the highest AOV.
Okay, that's the word coming in from the management of BigBasket on their IPO plans and profitability going ahead. But on that note, let's keep it going with all the stocks that are in focus today. And one pack that's in focus is the entire Nifty IT pack, biggest loser in today's trade, a 4% cut coming in. Dhwani, you've picked out TCS, which is believed to be the leader of that pack, one of them rather. And last 1 year, there's cuts of around 16% coming in. Last 5 days, it's lower by 6%. 1 month, 6 months, it's only seen cuts in double digits coming in. Do you believe that this consolidation that we've seen over time makes the stock attractive now? Are there better days for TCS on the charts?
Absolutely not. I'm seeing further cuts coming in on TCS, particularly if you're looking up at a broader data over here. Since 2010, the upward sloping trend line that it was holding on to, we've got a breakdown of the same, and from those levels, we are seeing further cuts coming in. In fact, in today's session, the cuts intensify over here. We are seeing almost a cut of right now at a cut of about 4% over here on this particular counter, and then it is yet to stay over here. On the technical side, I'm seeing that the counter has also tested its 200 weekly average over here, and with volumes we are seeing this kind of a fall coming in on this particular counter. And with the global scenarios that are happening over here, I see further cuts coming in over here till 3300 levels. So TCS is a sell coming in from this particular level. Also on the lower side, we'll be seeing 3300 on the short term basis, and on the higher side, the stop loss that one needs to maintain over here, or any bounce which sustains above 3640 levels, is where we'll be looking up at opportunities on the higher side. But given these levels are sustaining on the higher side as a resistance, we'll be seeing this fall continue over here.
Okay, so very negative outlook coming in on TCS from Dhwani. It's not looking good at all. A sell call coming in. Let's move on, shift focus to the pharma pack. And Janay, you've picked out Biocon for us. This stock is also trading with cuts of about 4%. Tell us what's the news flow.
Well, yeah, the stock is trading down, but the news, the company has actually launched its glucagon-like peptide, which is GLP-1 liraglutide in the United Kingdom market. Now, this makes Biocon the first generic company to obtain approval for G-liraglutide in a major regulated market. Siddharth Mittal, who is an MD and CEO, also said that the launch of this underpins Biocon's capability in developing and bringing to the market complex vertically integrated GLP-1 formulations, and going forward they will continue to focus their efforts towards expanding their reach to further European and US markets.
Okay, so that's the take on Biocon. Positive news flow, but the stock is giving into this market pressure. But on that note, we'll wrap it up on this edition of Market Fatafat. Dhwani and Janay, thank you for joining us. It's Janay's last appearance on the show. We wish him very good luck going ahead. But on that note, we'll wrap it up on Market Fatafat. Janay, thanks so much for joining us. And viewers, thanks so much for watching.
If you like this video, then like, share and subscribe to ET Now.